All right, the resilient consumer in focus this morning. Retail sales growing 0.4% in September from a month ago, slightly more than what analysts were expecting. And the jobs market not signaling a slowdown. Jobless claims coming in below the street's expectations. Of course, that is viewed as good news here for the health and stability of the labor market. Here to break it all down, we want to bring in Kathy Bostjancic, Nationwide Chief Economist and Senior Vice President. Kathy, it's great to have you here. So when you take a look, let's start with retail sales. It was broad gains. We saw this rebound in discretionary spending here this morning. Talk of this, there's some talk of this report now boosting the narrative that's been out there in the street over the last couple of weeks or so about boosting the idea of that no landing thesis. What do you think?
Well, good morning, Shona. Happy to be with you. These are indications of a continued healthy and robust consumer spending. It really caps off a very strong third quarter result. And particularly what we look at, this is the start, kind of the momentum heading into the fourth quarter. It's a handoff from Q3 to Q4. And it shows that the consumer continues to power along here. And that's positive, right, for the overall economy. It's really been consumer spending buoying the overall GDP growth in the U.S. So that idea that we don't have a landing or much of a slowdown, I think that does, the data are supporting that thesis at this point.
And so with that in mind, I mean, what then do you think the Fed is going to do at this point, really kind of digesting so much of the data points that are suggesting, hey, this could be effectively what we're looking at in the soft landing scenario, or even a no landing that continues to see their dual mandate at least be satisfied more broadly? And what policy action do you think needs to be initiated, if any?
Yeah, great question. And it is really what, the markets are struggling with right now. And I guess it's a good problem for the Fed to struggle with, right? That economic growth continues to surprise in the month of September on the high side. So it was, retail sales, but before that, it was employment. But along with that, inflation came in a bit firmer as well. So it does, I think, give them a little bit of, a pause. It's just to say, do we need to pause, the continued rate cuts? That we kick things off with 50 basis points. Do we need to continue that? Do we pause in November, take a little break, and assess the data? I think there's still a strong argument for them to cut rates in November. They could just pare the size back from 50 to 25 basis points. But it's not a slam dunk that they will cut rates. One of the things that we're looking at is that monetary policy we still see overall is quite restrictive. The housing market is still struggling and suffering under the weight of high interest rates. Mortgage rates actually are going further north and rising because we're seeing 10-year yields break above 4% and rising. So that little reprieve we saw in lower mortgage rates, that's been erased. And you still see borrowing rates for autos and for credit cards are still very high. And remember that disproportionately weighs on lower income and middle income households. So there's still a restrictiveness, but the Fed does have to kind of debate whether they keep going and maybe that you reignite inflation to some degree, or at least you stop the disinflationary process. We don't think that's the case, but that's what they're going to be debating.
Why are you so confident that we're still in this downward trend when it comes to inflation?
Really, when we look at the bottom-up factors, we don't see a lot of reason, to worry about some of the pop in the readings that we got in September. Like there were idiosyncratic increases, like apparel prices were up over 1%. That's not likely to continue to repeat. Even things like a little smaller in detail, but sporting events costs were up almost 11%. And then there was just other categories like that, medical care services pop. It doesn't mean that we can't have some, maybe a slower downward trajectory. But what's really encouraging is that shelter costs, the increase there slowed, and all of the data we've been looking at, new rental data, total rental data suggests that rental inflation's easing, and that means shelter inflation is going to ease, and that's a large share of core CPI, over 30%, and a large share of services, which have been the stickiest part of inflation.
Kathy Bostjancic, who is the Nationwide Chief Economist and Senior Vice President. Thanks so much for taking the time here with us, Kathy.
My pleasure.